It's here, the most wonderful time of the year.
It's the most wonderful time of the year.
Hi everyone, I'm Marc Lichtenfeld. Welcome to State of the Market. I know Christmas is still 2 months away. I'm not talking about the holidays. For me, the most wonderful time of the year is earnings season.
Boring.
Boring is my middle name, so.
Now, before you say bah humbug to earnings season, I say it's even better than Christmas because it happens 4 times a year. And last I checked, Santa doesn't make quarterly deliveries. Now, I like earnings season for 2 very different reasons. For my long-term holdings, it's an opportunity to get an update on how the companies are doing. In those cases, I don't care if they beat expectations or not. I'm not that short-term focused. I want to get an understanding of the direction of the trend for revenue, earnings, cash flow. Are they growing? Did they hit a bump in the road? Do I need to start keeping a closer eye on the company, or is it smooth sailing? My long-term holdings are indeed long-term.
It's in the name.
I plan on holding those stocks for years, so a bad quarter here and there isn't the end of the world, but I want to make sure it's not a trend. If it is, I need to seriously think about getting out of the position. But earnings season also presents great trading opportunities. Stocks can jump or crater depending on whether they beat earnings expectations or miss them. And again, for my long-term holdings, I don't care about that. But for trading, it can be a powerful catalyst. For example, home builder TriPoint Group jumped 7% in one day after reporting first quarter earnings in April. Now, I recommended a cheap options play on the stock 2 days earlier, expecting the company to beat expectations, and it did. And we eventually cashed out for a 139% win in about 6 weeks. Now, one of the key things that I look for is a history of beating analyst expectations. A strong track record of reporting earnings higher than analysts' forecasts. It's not a guarantee that they'll do it again, but it is a sign that the company's executives know how to manage Wall Street's expectations. And companies with strong track records of beating expectations typically repeat that performance. Now, you can use a free tool on Seeking Alpha to see if a stock you're interested in beats expectations more often than not. Go to seekingalpha.com, enter a ticker symbol, click on earnings, then earnings surprise. It defaults to annual, which isn't very useful, so click on quarterly and you'll see the results of the past 16 quarters. This is the earnings surprise history of Eaton. Now, you can see here that it has beaten expectations in 15 of the last 16 quarters, including the last 14 in a row. Again, no guarantee that they'll do it again in the September quarter, but that strong history is a pretty good indication that it will likely do it again.
Again and again. And again and again and again.
Now, trading earnings season is one of the most lucrative ways you can trade short-term catalysts. And each week I run a system that tells me the stocks that are most likely to beat expectations in their upcoming earnings release. If you'd like to learn more about these profit blast opportunities, click the link in the description. Trading earnings season correctly means Santa is likely to leave more stuff under the tree during the second most wonderful time of the year. Thanks for watching State of the Market. I'm Marc Lichtenfeld. I'll see you next time.